Today, I want to talk about how some brokers still haven't performed the AMC APE conversion and are still trading APE shares. I also want to talk about how these brokers and trading platforms can now also be held liable for market manipulation. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Boss Blunt's tweeted saying the corporate action, aka the conversion and reverse split by AMC, has been delayed by the clearing houses in many overseas brokers, saying European broker-dealers have been delayed in getting the reverse split and conversion properly completed. It's now been 3 weeks since the AMC actions, and they have not been settled yet in many European brokerages. This user Tourist or CNARF83, or specifically Eric, received a message from his German broker regarding AMC. Now obviously this message is entirely in German, but Boss Blunt has come to the rescue with a translation. So the translation from Trade Republic Germany says, "Hello Eric, thank you for your message regarding AMC. In the case of foreign dividends, reverse splits and conversions, the credit can certainly be several bank working days after the official payday or the official event. In the case of the above mentioned joint stock company, there is still a delay in processing. At the moment, we're dependent on further action of our warehouse or clearinghouse, which carries out the dividend payment for us. Normally, the distribution will take place in the following days and the dividend will be credited to your account. Thank you for your understanding." So it's been over a month now and these clearing houses still cannot find real AMC shares for the conversion and reverse split. It's likely the American brokerages got first dibs on those shares because the American companies, American brokerages and American institutions are the ones that need to report numbers. Obviously those overseas institutions like those incorporated in the Cayman Islands, but also I guess companies incorporated in Europe, don't have the same US filing requirements. That's why we know the synthetics are hidden overseas in the Cayman Islands, in Puerto Rico, and likely in European funds as well. And that's why these European brokerages still cannot get their hands on real AMC shares and are simply still having to use placeholders or still haven't performed the conversion. I also saw a tweet the other day on how APE QSIP numbers are still trading every single day, specifically European QSIPs. But interestingly, John Berder has tweeted saying broker-dealers can now be held primarily liable for failing to fulfill their gatekeeping responsibilities of monitoring their clients' and customers' trading activities. So this is Warshaw Bernstein, the legal firm, prevailing against formidable opposition from major banks and brokerage houses, saying a federal district court judge just issued a verdict that will reverberate through the compliance departments of every brokerage firm on Wall Street, saying in her decision, which denied the defendants or brokers' motion to dismiss Harrington's market manipulation claims of spoofing, Judge Schofield found that broker-dealers may be primarily liable for manipulative trading initiated by their customers because they serve as gatekeepers of trading on securities exchanges. Now this is very interesting because it now sets a precedent for that MULN lawsuit. Remember, MULN has just sued a number of brokerages and trading platforms like TD Ameritrade and Charles Schwab for market manipulation. And John Berder added saying it bodes well for all of the other cases, including the potential case that MMAT may file. So it seems there's going to be another case against these trading platforms and brokers for market manipulation, for manipulating securities like MULN and MMAT. You may remember Hycroft Mining has also requested the same audience with the Nasdaq due to their $1 delisting requirement, and therefore Hycroft Mining may also file the same lawsuit too. And if Hycroft Mining again files a lawsuit against these brokers and trading platforms, I'm sure AMC would be right behind. Many of you are aware the market is teetering on the edge of an all-out collapse. Now, all of you are hedging this collapse by holding AMC, but many of you are also hedging in other ways, such as with crypto or with rare metals like gold. Today, I want to talk about the first and only crypto that combines both of these. TMN Global, ticker symbol TMNG, purchase precious metals, rare earth metals and technology metals and store them in bonded warehouses. They also plan on releasing their own crypto debit cards, their own exchange, and a stablecoin all in 2024. TMNG is also solving the problem of allowing you to own rare and difficult to obtain metals like lithium, gallium and indium in a straightforward and easy way right on your mobile device. TMNG is also regulated by the VQF in Switzerland, and the contract has also been audited by CertiK. So be sure to head over to tmn-global.com, check them out, buy some TMNG token and join the technology metal revolution today. It says in their motion, the defendants unsuccessfully argued they're not responsible for what they characterise as their customers' trading, and accordingly cannot be held liable for unlawful trading or unlawful shorting they carry out on behalf of customers such as hedge funds and market makers. The court categorically rejected the defendant's argument and held that where a broker-dealer fails to monitor its customers' trading and is reckless in not knowing the trades are being executed at their customers' discretion were manipulative, the broker can be held primarily liable. I personally think this is the way to rid the market of illegal naked shorting. It's pointless if the market maker can create a synthetic share if they can't synthetically short that share to anyone. Because obviously for a market maker to synthetically short a share, they need somebody on the other end to buy it through a trading platform or a broker. But if these brokers and trading platforms are not allowed to engage in the purchase of illegal synthetic shares, well, the illegal synthetic shorting doesn't happen. And it says a broker can now be held primarily liable under the federal securities laws when they recklessly fail to monitor, detect, and prevent the manipulative or fraudulent trading. I personally think this is brilliant news, and I cannot wait to see the outcome of the MULN lawsuit and potentially an MMAT lawsuit too, and potentially a Hycroft mining lawsuit and an AMC lawsuit on top of that. As Bigham's tweeted, it seems we now have these shorts really backed into a corner. He said, remember when these shorts pretended to cover 50 million FTDs? You may remember back at the end of August, there was 50 million FTDs the day before the AMC APE conversion. The day after, just 11,000, which I guess is 110,000 adjusted for the reverse split. But just 2 weeks later, that number is 5.6 million, or again, 56 million FTDs in one singular day. They pretended to cover those FTDs, but it only took them 2 weeks for them to reoccur again. I think for the second half of September, or maybe for the first half of October, we're going to see more and more and more FTDs. We're going to see them occurring more regularly, we're going to see AMC back on that threshold securities list, and we're going to see more and more of the float failing to deliver every single day, until eventually these market makers and these hedge funds cannot use those brokers to roll or hide their FTDs. As I said, if there's nobody left to synthetically short shares to, because it's illegal for those brokers to sell those shares, well, synthetic shorting ceases to exist. And if that's the case, the AMC price will not be suppressed without that illegal shorting, and the AMC price will move upwards. All of a sudden, these hedge funds, these shorts, and these market makers that do hold significant illegal short positions will all of a sudden see their positions move against them. All of a sudden, those unrealized gains will dwindle to nothing, and unrealized liabilities will start mounting up until these hedge funds experience margin calls. And obviously, as you well know, when that happens, the squeeze will happen too. But yet the mainstream media is still trying to sway your decision, now speaking about how the Taylor Swift Eras Tour is apparently great for Cinemark, but somehow bad for AMC. James Rogers tweeted saying the Taylor Swift mania continues. The Taylor Swift Eras Tour sets pre-sales records for Cinemark. But as the Ape Jeremy from Utah pointed out, it seems James Rogers forgets to mention that AMC receives almost 50% of Cinemark's revenue as the actual distributor. AMC receives 50% of this revenue, 50% of this pre-sales record, for doing absolutely nothing, incurring zero cost, just because they have the distribution agreement. Cinemark has to pay all of this money to AMC literally just to borrow the film. So that's even more money for AMC that is direct profit for doing nothing, just forming the deal with Taylor Swift. So as you can imagine, this Taylor Swift mania isn't just brilliant for Cinemark, it's even better for AMC. As Jeremy tweeted, he said Adamaran and AMC are out here making big money move after big money move, while other companies are struggling, downsizing and laying off staff. This is actually something really interesting. 2023 has been a year of massive layoffs in the banking divisions and also in the tech sector. These two sectors have experienced massive layoffs, and corporate bankruptcies, large corporate bankruptcies, are at 20-year highs. We've currently seen more large corporate bankruptcies in 2023 than we saw in 2020 and in 2008. But yet AMC is out here hiring more staff, making more revenue and even more profits. And he said, I wonder what else Adamaran has in the works that we'll find out soon enough. And Jeremy believes it's a great day to be an AMC investor. I personally am very excited to see what the outcome of this lawsuit will be, and whether these brokerage houses, trading platforms and brokers will receive fines, and whether they'll be forced to stop manipulating markets. And if that is the case, how will market makers actually sell those illegal synthetic shares? Who will they short them to if retail investors aren't allowed to buy them? So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.